Hey all, welcome to ShareTreck. Good morning. It's the 2nd of May 2022. And today's theme basically is that we are in a bear market for Nasdaq. It's down almost 23% from its peak. And anytime Nasdaq falls below 20%, we can easily call it a bear market. And by extension, all the genomic stocks are also going to be in bear market because our genomic stocks are in Nasdaq. So having said that, let's get started with today's update. So here are the few headlines that gathered my attention. The first one is a momentary blip in the European stock market where there was a sharp drop of 3%, only for the market to recover before close at 1% down. So this is being investigated by the European exchanges. But one of the things we should remember is that the volumes were much lower. So in low volumes, you can always have high volatility. Besides, these days, the market is a very complicated place with algorithmic trades, retail investors in greater number as compared to institutional investors. So things can be different from what it was in the past. However, it should be noted that in case of Europe, the participation of the retail investor is much lower than it is in case of US. So it'll be interesting to see what exactly happened. I bet it could be a algorithmic trading glitch that caused the brief drop and the bounce back. We'll find out what it's all about. Meanwhile, equities continued to fall in Japan, Australia, and South Korea, while Chinese and Hong Kong exchanges were closed for a local holiday out there. And also on Wednesday, the Federal Reserve will be raising interest rates by 50 basis points. And as a result, the bond yields are already up. And this will put further pressure on Nasdaq and on the stocks which are more of a risk-on kind of stocks. For example, Genomics and all those new technology stocks like SoFi and Marathon and PubMatic, those kind of stocks. They will definitely feel a lot of pain because of the fact that the yields are going up and the interest rate is going up. One of the things that I have noted is that the mixed Q1 earnings have failed to provide the much needed boost in the market in order to counter the downward pressure coming from the Fed action of increasing interest rates. So the results of Amazon, for example, or the results of Alphabet, they did not do much to boost the sentiment. And even Apple, when it came up with good results, it did say that the next quarter is not looking great because of supply chain shortages and stuff like that. So it's been a big mixed market, and there are islands of excellence out there which are being discounted because of the overall muddying of waters by some of the companies that reported good Q1 but bad outlook for the next quarter, or a mix of totally bad outlook for next quarter and bad results for Q1. So that's where we have been, and hopefully this starts clearing up as the inflation rate goes down and the Fed is further ahead in its tightening process. Meanwhile, a biggest indicator for us is going to be the results from Berkshire Hathaway, and the Berkshire Hathaway earnings are down by around 53%. It's very interesting to see that the year-on-year growth of Berkshire Hathaway earnings is down by 53%, basically because of the slowing US economy. As a conglomerate with diversified quality assets which have been handpicked by Warren Buffett, they are kind of a benchmark for us because they have always performed very well. This should be a warning for all of us that the times are not good because Berkshire Hathaway has got diversified holdings and quality holdings, and the overheated economy is seeming to be a precursor to bad times. So we need to be careful when the economy is overheated, labor market is tight, inflation is very high. So something has to give, and it's usually followed by a steep drop. So reportedly, Warren Buffett bought more of Apple stock and stopped only when Apple stock prices went up again. And in his own words, Warren Buffett said that who knows how much I would have bought had the price not gone up. So that shows that tells us that this is a good reminder that we should not be dogmatic about our investment and should be able to take a good pick, a good opportunity when we see one, and not let it go because it's not in our vertical of our choice. That equally applies for someone who is investing in technology stocks. If they see a good genomic stock languishing, they should just take the opportunity to buy. And likewise for us genomic investors, if we see something else that is out there, which is a really good quality stock that has fallen down significantly, we should just not hesitate to pick it up, because at the end of the day, the profits can be reinvested back into genomics, the place where our interests lie. So that's the takeaway I have from here. So this kind of brings me to an end of contemporary news that would make an impact on the markets today. I think Berkshire is definitely going to have a negative impact on the market. The fact that Fed Reserve is going to increase the interest rate by 50 basis points on Wednesday is definitely going to have a negative impact on the market. And the uncertainty around the European markets, the fact that they fell, Australia, South Korea, and Japan have all had bear markets. So all that overhang is definitely going to be there on us. However, apart from that, we still have the ongoing background noise, risk factors and bear factors which are there. The first one is the Russia-Ukraine conflict, which is still continuing and which is still casting the same risk on oil. And we also have the situation which is the supply chain constraint, which is unraveling very slowly. If it unravels much faster, we could have a bit more respite in the inflation. And again, I go back to my own conclusions. I think that probably we will be in a situation somewhere around end of May or June when the inflation would start coming down in the reports, and the Fed will start having a more relaxed outlook, and then the bond yields will start falling, and we will then have beginnings of another bull market. That's my prediction still, looking at the way things are going. And here are the earnings for this week. So in the morning, we already had Berkshire Hathaway's results. We would have BlackRock results and Park Hotels. But in the evening, we are going to look at Expedia and Avis Budget. Those two are very interesting. And apart from that, I think on Tuesday, I would be keen to see what's happening with Pfizer, with AMD. Of course, BP is going to report positive results, and they are in a bull market right now. Airbnb, I'll be interested in seeing whether there is a lot of tourism going on in hospitality industry. Hilton, of course, the same. Lyft, and we got Biogen reporting. That will be another interesting one for us to see. Of course, Caesars, and we have CVS Health coming up, Moderna coming up on Wednesday. We also have Marriott coming up, which is again something I'd be interested in looking at. And what else do we have here? Shopify is coming up on Thursday, so we'll see what's the actual situation in at Shopify, whether it's worth being so bearish about it, and what is their forecast for the next quarter. So hopefully, if that is good, then Shopify shares can get a bit of a bounce. There would be some money to be made out there. Results from Lucid, I believe NEO reported very bad delivery results. So we'll have to see what happens with Lucid, whether they have been able to handle the supply chain bottleneck better, and whether they have been able to meet their targets. Then, of course, on Thursday, we have Wayfair, which is again consumer discretionary expenses. And of course, Vertex, that's another company that I would be interested in looking at. And then finally on Friday, we have DraftKings, Under Armour, Goodyear, Cigna. So a lot to look forward to this week. But overall, I think the bearish trend needs a lot more push in order to turn around. And I don't think it's happening anytime soon. So it's going to be a volatile week, in my opinion. Let us see how it goes. With that, let's go on to look at Nasdaq and the indices. So let's have a quick look at our indices. I'm going to start off by looking at the futures to see where it's pointing. Futures seem to be optimistic. It's marginally positive. Earlier in the day, it was marginally negative. So futures are undecided, in my opinion. Let us look at the indicators that we have here. The first one I'm going to look at is oil. So oil is dropping down, but it's getting a support here at this diagonal green line, which was a resistance before for us. and we'll have to see whether it's able to break down because the support is very strong. It has got the support of the 50-day exponential moving average as well. Therefore, it's going to be difficult for oil to fall below this. But if we look at the MACD, you can see that the MACD is slightly bullish, but momentum is falling. So we'll have to watch what happens during the rest of the day. It's very difficult at this point of time to determine whether we are going to break down below this or we're going to just bounce off this and then test the resistance at 107.52. So that is one unconclusive indicator for us here. If I go to the put call ratio, the put call ratio is standing at 1.34, which means it is very bearish. This indicator is pointing towards bearishness. Next, let us look at the VIX. I'm looking at the live VIX, and this is the candle for today, and it has gone above the resistance of 32.53. So I'm going to mark it as a resistance out here. Anytime the VIX goes up, it means that the Nasdaq is going to go down because volatility has increased. And we can see that the MACD is also deviating from the signal line spectacularly, and the momentum is also pretty high. So there's a good possibility for VIX to start aiming to reach the level of 40.03, which is this red line out here, which is going to be a kind of all-time high in the recent past, going back to 11th of June 2020, or for that matter 20th of October 2020. So in the last 2 years we have not been in that region, but that's where we are aiming to go right now. So it doesn't look very encouraging for the bulls in the market. Now let us look at the yields. 6-month yield is dropped, and if we look at our 10-year yield, it's also dropped, and our 2-year yield has also dropped. So there is a bit of a drop out here. Again, I'm getting mixed signals. When the yield drops, it is good, but at this point of time, given all the mixed signals that we have seen, it's very difficult to predict which way the market is going to go. But my gut feel says that it's going to be a bearish market today, given the fact that we have a whole host of unresolved risks out there. With that, let's go and have a look at Bitcoin. And Bitcoin is marginally positive, still struggling to go past this red line of resistance, and still struggling to go past the 9-day exponential moving average, which is at 39,489.8 at this point of time. Our MACD is bearish, but moving towards the signal line. Momentum is below average and flat. So I don't think this gain is going to last for much longer. However, Bitcoin always has the tendency of dropping during the weekend and picking up during the weekdays. So there'll be a bit of a push upwards from there. But overall, I think Bitcoin is destined for a bearish day. Of course, I'll qualify with the caveat that all the indicators that we have seen so far have been mixed. So it's very difficult to predict where it's likely to go. But given the overall market conditions, I think that on balance, the bias is more towards a bearish market than a bullish. So Bitcoin is likely to be bearish for the day. And if you look at gold, it's gone down and fallen below the support of 1871. So I'm going to mark this support as a resistance. And I'm definitely disappointed that gold did not follow my bull thesis of cup and handle pattern, which should have given us a spike towards 2,400. But on the other hand, it has formed a new cup out here, and this is the new handle being formed. So there is also potential for us moving up again. So I'll wait for that to play out in the next few days and see if we can get back to the highs in gold. The fact that gold is dropping indicates that Nasdaq should go up. There's again another contrary indicator out here compared to what we have seen other places. So with that, I think I would like to go and have a quick look at what's happening in the genomics. The market is already open. It's 9:41. So let's do just that. So here we are in the genomic space, and I have sorted out all the holdings based on the winner being on the top. So Teladoc has bounced back. Of course, we should remember Teladoc had taken a very, very massive beating. So if it is bounced back, I mean, it's but to be decided. There's a lot of way to go back for it. And if people buy Cathy Wood's thesis, the short video that I showed you in my weekend segment, That was very convincing. If people buy that, definitely there's going to be a bit of a bounce in Teladoc, but I don't think this is going to last for the day. You may think that I'm bearish, but based on my experience all these years, I think the market is bearish right now, and any green that we are seeing here is momentary. Of course, I may fall flat on my face on a later date, but let me assure you, nobody knows what the market is going to do. And I'll be honest with you about it, because I'm operating by gut feel right now, because my technical indicators are all mixed. Some indicators are pointing bullish, some are pointing bearish. So I'm going to go with my gut feel. I think that it's a bear market. I may be wrong, but again, these are my opinions and not financial advice. So please do your own due diligence and see where it leads you to. With that, let me go on to Bluebird, which is up 4.68%. And we are going to have the earnings coming up for Bluebird. So we have Bluebird, which has gone up 4.68%. I'm just zooming in so that we can have a much better view at the candles. These are all one-day candles. And unfortunately for us, they are not big enough because the volumes are much smaller. And the movement is also much smaller because the base is small. I'm going to try and see if I can do a logarithmic scale. It doesn't make any difference. I'll keep it in auto. So we have fallen quite a bit on Bluebird, and we have the earnings coming up. And I have done an earnings video for Bluebird. The company is in a difficult situation, in my opinion, and it's not likely to do very well. So whatever green we are seeing here, it's the optimists out there who believe that Bluebird can turn around and its BLA will get approved very quickly, and maybe it will take a lead above Beam and CRISPR when it comes to sickle cell disease. If that happens, Blue will definitely be a spectacular turnaround story. They're running short on cash, so I don't know why this green is coming up here, but it could be speculators. Allogene is up 2.16%. And if I look at the MACD, let me just expand this so that we can see the candles much better. So we have a bullish candle here. We started low and went up. Of course, we started below yesterday's close. So it was not a great start as such. But given the fact that we have gone above yesterday's close, that seems to be slightly positive out here. The MACD is also bullish. The momentum is below average but picking up. That's also a good sign. And also it's a good sign that we have gone above yesterday's open. Since then it had fallen below. Allogene continues to work positively today. But as I mentioned, the overall market is bearish, so I don't think this is going to last for much longer. PSEB is good at 2.68, really good company. It's a good pick for, in my opinion, it's a very good pick at these low prices. Probably it may fall further during the day. It will be nice to pick it up. Our MACD is bearish, but turning towards the signal line in a bullish manner, and the momentum is very low and it's picking up. So there's not much participation out here in PSEB, but it could be a good opportunity. I believe in that business model. Caribou Biosciences is down, it's up 2.08%, constrained by the 9-day exponential moving average. MACD is bearish, but turning towards the signal line, and momentum is picking up, though it's below average. However, I don't think the green is going to last for much longer, basically because of the bearish conditions and the mixed signals in the indicators. DNA is up 3.45%. MACD is bearish, moving away from the signal line, and momentum is just about picking up. This could probably end up flat for the day. IMTX is up 1.93%, again pushed down by the 9-day and the 20-day exponential moving averages. MACD is trying to go towards the signal line, but still far apart, and momentum is below average and picking up. So IMTX could probably have some steam today, given the fact that the earnings are also coming up, but the overall bearish market could get a better of it. ARCG is up 1.88%. Our next resistance is 36.91, way below the 9-day exponential moving average, looking very weak right now. And MACD is again bearish, and momentum is absolutely very low. So ARCG could probably get a sympathetic boost, just like Teladoc. But if Teladoc fizzles, so will ARCG. Editas is up 2.27%. And there are a lot of believers for Editas. It has opened below yesterday's close, but it has managed to pick up, but it's still not crossed yesterday's open. So it's still in a weak situation. MACD is also bearish. Momentum is not big enough. I don't think the gain of 24 cents is going to last. Then we are looking at CRISPR Therapeutics, which is up 1.09%. And it has got a hammer candle. It's slightly bullish. Momentum is below average. MACD is moving towards the signal line, but it is bearish. Volumes are also quite low at this point of time, but I think characteristic to what it should be. I also don't think CRISPR is going to retain all the gains, but there could be some speculators who are playing the earnings day because there could be some good news about any of the clinical trial data. And then we are looking at Verve, which is down 0.07%. It's looking very weak on the charts, likely to stay red. Illumina is up 0.71%, and it's got a support at 286.31. All the indicators are bearish for this, so it's going to most probably lose the gains out here unless there are a bunch of speculators playing on the earnings day. Beam is up 2.31%, and we have bearish MACD, and we have very low volumes. Again, I don't know if this can persist other than a play for earnings, but earnings is quite far away. It's on the 11th, so on the 17th. So not sure why there is a positive out here. IDNA, which is our overall indicator for genomics, is up marginally at 0.81. MACD is bearish and momentum is just about picking up. So IDNA indicates that it's a weak market for genomics today. Novartis is down minus 0.59%. And Regeneron is down minus 1.10%. Again, earnings coming up. So if there are speculators, there could be a possible movement up for Regeneron. Intelia is up 0.63%, and doesn't look like it's going anywhere further up. It's likely to end up positive, slightly positive or flat, because both MACD and momentum are weak. Pfizer is down 2.40%, and all the indicators are weak, so it's going to stay in red. Vertex is down 4.66%, and earnings coming up. Maybe some speculation action can happen today, later in the day, but right now all the indicators point to a red close. That brings me to the end of my session today, and I hope you had a good weekend, and I hope you have a good day in the markets today. Just be very careful. It's very volatile out there. Thanks and have a great day. If you like this video, please press the like. And if you have not yet subscribed, please subscribe. It's absolutely free. Help us grow this channel. And I'll be back with you tomorrow. Bye for now.